If you're new to crypto, just getting started, or struggling to make money, this video is for you. This is a free crypto course based on over 8 years of real experience in this market. I've gone through the wins, the losses, and learned what actually works, and I'm sharing the most important lessons here. I'm CryptoGit, I made over 5,000 X in crypto, and everything I've done is verifiable with proof. This isn't theory, this is real experience. So let's get it started. So the first most confusing part when you get started out in crypto is you don't know what you decide. Should I invest? Should I trade? Should I do some bots, some algorithmic trading? Or you get presented with a ton of different opportunities. This happens all the time. I get questions a lot, what should I do? And in this lesson, I'm gonna teach you exactly what is the most optimal way to make real money in this industry. First of all, as you know probably better than me, trading is basically what is being pushed online. Like the narrative of trading is something that everyone talks about it. All influencers online tell you that trading is the only way, but you don't get something. So in the first stuff that you need to understand, the data shows something simple. The data shows that 90% of retail traders lose all their money. What does that mean? It means you're joining in an industry or in a field that you got all odds against you. Now, I know the dream and the idea that what influencers tell you or what you want to do. Listen, I'm going to be the next 10% or I'm going to be the profitable one. But you're not really smart for doing something where odds are against you. It's like going through a race when everyone has an extreme quick car and you're by foot, right? So this is what you need to understand. The odds for you to win in trading are this. 90% you likely lose. And a lot of people might not agree. A lot of people might not like what I'm telling, but this is what the data is showing and this is not what I show. So you gotta realize up something when it comes to this game of investing, trading, and all this kind of stuff. I've been where probably you might want to go or you are right now. When I started out, I literally had nothing. And when I begin with crypto, I basically couldn't have the luxury to invest. Because honestly, at the beginning, investing feels like a luxury thing because you put money, then you just wait a few years till they go up. But when you got bills to pay, when you need money on the daily basis, of course it's hard for you because you don't know what to do. And that's why people get into trading. But what happened with me is that I spent a lot of time and I had a lot of stress constantly staring at monitors 24/7 trying to find the next big opportunity in this industry. And what happened is that if I just at that time bought Ethereum, which was the second biggest crypto, and did nothing, I would have made more money. So why I tell you this? I tell you this because what happened after that is very important. If you go on social media, you'll actually notice that everyone has a trading refer link, trading course, trading everything that has to do with social media is mostly about trading, and you know this because probably you have seen. But if you go and notice something which is quite different, and when I tell people this thing they'd be like, oh, I'd never heard before, is that the real people, which are the real successful ones, are the ones that are in Forbes list from crypto, like founder of Coinbase, founder of Binance, which are the biggest exchanges in this industry. Now, when I was doing my research, I noticed something similar that all those guys that are in the Forbes list, the billionaires, had in common. All of them made their wealth in this industry by either building a company, a business, or they held a coin for long term like they were early on Bitcoin. None of them tells you, listen, I traded this coin, I bought this, I went to this exchange, I sold at that time, I did this, then I did some technical analysis. This is what billionaires did. And why I tell you this, because you might be like, yeah, I don't want to be a billionaire. Of course, I can totally get that. But what do you think is the most optimal way to succeed? The scheme or the way that the billionaires followed, or the way that social media is telling you from influencers, which you don't get actually if that's the right information, right? They sell you the dream with luxury vacations, lavish lifestyle, cars, but these are not the people that are the real wealth. The real wealth is here. So what you need to understand is this thing. Why trading is being so pushed and why you need to focus more on investing. You have to realize something. The people that are behind the scenes, or call it different, the big dogs, are the ones that control the narrative. So what happens is, for example, this is a founder of an exchange which is Binance, which is the biggest, one of the biggest exchanges in the world. How Binance makes money? First of all, you need to understand that the crypto market is player versus player. So what does that mean? This is such an important thing because you have to realize that for you to win, someone else to lose, and vice versa. When you lose, someone else won. So you're competing all the time with people and with the other side that wants to take your money. So it's not that you do something productive, you're competing with other people's. And what does that bring? That brings that those guys that control exchanges, they make the most money by pushing you to trade, right? So what happens is, how we can do that? We can hire influencers. And how influencers operate, most of them, they all got referral links, or call it differently, there are links that those exchanges give, affiliate links, to bring normal people like you that get manipulated from the scheme. And you know who benefits the most? The billionaires. It's not the influencers. This is where what people get wrong. People get stuck in this field. You think like the real successful people that are actually showing you what to do are those guys. It's not those guys, it's those guys, but you don't get this scheme. This is a big scheme that you gotta understand. So I'm telling this because I've done those mistakes. And I'm not saying, don't get me wrong, by the way, I'm not saying trading doesn't work. Of course you can make some really great returns. Of course you can do great, but it will never outperform buying and hodling. Bitcoin did 6 million X from the start. Can you imagine putting $1 and making $6 million? You're never gonna do that on trading. Solana in the last bull run did over 100x. No matter how much you traded during 2021, you could never outperform what Solana did. So at least if you wanna trade, at least be smart about it. Have most of your capital in investing for long term, and some of it, if you want, go and trade. But understand this scheme, which is such an important. The data shows that 90% of people lose all their money. As I said, you're entering a game that you're by foot and others are by actually a quick car. And what you have to understand, another thing that I'm going to show you and most of you probably haven't thought, is the competition. So everything that comes down to crypto, it comes down to competition. For example, Bitcoin on the early days, you could have made more money because you had less people. You had all those brilliant minds that bought it, but you didn't have the crowd. Like, the more people join it, the more people got familiar with something, the less gains we had, right? Because if you get all the people to agree and to know something, the gains will be minimal. So you have to realize something about competition with trading versus investing. So via trading, you're competing with normal people like you and me. I'm trying to take your money, you're trying to take my money, right? You're competing with robots and AI. You're competing with exchanges too that actually make money by you losing, because that's the business model they have. But you have to realize something when I talk about robots and AI, because this is such an important thing. Trading, you're in competition with trillion-dollar institutions. Firms like Citadel, like BlackRock, no matter how good you can be to predict the next trend, they have tools that you'd never imagine. So if you want, go and research what Aladdin is from BlackRock. It's a robot that BlackRock has used for many years. And this was an information known 5 years ago. Imagine how amazing, how developed this AI bot is, Aladdin robot. Imagine what they can do with trading. So no matter how smart you predict the next, let's say, trend down, you'll never be ahead of them. Citadel, for example, is known, and a lot of firms have this thing, the biggest hedge funds, they're known that even if you notice a trend and you place an order here, a trade here, they will execute faster than you. They'll place it probably here. So they'll always be quicker than you. No matter what you do, they have tools that you'd never imagine. Why I tell you this? I tell you this because I need you to understand the competition that you have when you trade crypto. You're trading not even with people anymore. You're trading against robots. You're trading about things that you never imagined they existed. Versus investing. Investing, you got normal people, like you got on trading, and you got institutions that of course they want to make more money, like BlackRock that is buying Bitcoin. But here's the trick that most people don't get about trading versus investing. Investing of course makes more money, but it's all about the frequency where you have when you have the competition, because this is such an important thing. For the majority of people, they are day traders, they are swing traders that maybe trade once a week. So the competition with those smart minds here and robots, you're having every day or once a week, right? So you're constantly competing with those guys. Well, with investing, you have it only 2 times. Why 2 times? Because it's just the one time that you buy and the one time that you sell. Here you're trading on weekly basis with the competition that is the hardest. And you have to be really careful because, as I said, it's easy to say something and it's hard to make it. And don't neglect the data. I know a lot of people that always love to be superheroes and they lost everything. So if you want to know how to make the most money in this industry, it's all made via investing. And when I say investing, it's not for tomorrow, it's not for 1 month, it's all about long term. When I say long term, is minimum 1 year. The old guys that are today in Forbes list, as I said, they either built a business or held something for long term. None of them says I'm a trader or I traded this, I bought this, I did that. So this is the harsh reality, and I know many people might not like, but I don't care. I'm showing you what works and what I've learned by being 8 years in this industry. Before we continue, I want to quickly mention something valuable. I run a free Telegram channel where I post daily insights, in-depth market breakdowns, and things that I can cover freely on Instagram and my YouTube. It's 100% free, no hidden stuff, just pure knowledge and updates to keep you ahead of the curve. You can find the link below or pinned comment if you'd like to join. It's all free, and let's get back to the video. The next most important thing that you gotta realize is what actually moves the market, because you have to understand that everyone would teach you something for paying attention when you analyze a market. They'll tell you technical analysis, fundamentals, they will bring you indicators like RSI, MACD, and you're constantly in distraction mode and you don't know like what actually moves this kind of stuff, right? Because you might have a ton of indicators, but it's not about what has some impact. It's about the indicator that carries the most weight in the market. So technically, what moves the market, right? And the answer to this is monetary policy, or said differently, Federal Reserve. So what happens? When Federal Reserve actually has in control the interest rates. Why interest rates are so important? Because if we have lower rates, it's bullish for crypto, and if we have higher rates, it's bearish for crypto. Why? Because it's all about the supply of money being in the system. If people have lower rates, they spend it more. They buy more houses, they feel more, institutions have more cash flow in their hands because they can actually get, let's say, loans cheaper. And this is good because it means more money is into the system, and when there's more money into the system, it's very likely to go on risk assets. High rates are bearish for crypto. Why? Because people are not incentivized to spend that money. They are incentivized to basically hold that money. Like for example, when you have high interest rates, the home or house market is struggling because no one can move anymore and buy a new home. So the economy gets shrinked, right? So that's why it's so important for actually the market. And another thing which is very important is the Fed balance sheet. Fed balance sheet is basically what actually Federal Reserve holds, all total assets, treasury bills, T-bills, bonds, everything. So why this is important? Because the moment that Fed balance sheet goes up, it means that they're buying T-bills or they're buying treasuries, assets in general. Federal Reserve, it is putting money into the system. Why this is so huge? This is so huge because when Federal Reserve buy assets, it means that crypto stocks do well because there's more money injected into the economy. Now, what you gotta realize is that this is the first thing which you need to understand. This is what moves the market the most. Now, no matter what your technical analysis can say that, yeah, we might be bearish or bullish, if Fed does something tomorrow, the market will follow the Fed, right? Because that's what holds the biggest weight, right? I'm not saying technical analysis or indicators don't work. Everything can work. What matters is what is the thing that holds the biggest weight in the market. Because if you don't understand this thing, you'll never get to understand other stuff. Now, the issue with actually lower rates and balance sheet going up is you might be like, yeah, but why it never happens all the time when Bitcoin goes to the moon? It doesn't, because it comes with risk. When you actually have low rates and when you actually increase the balance sheet and when you inject too much money into the system, you bring inflation up, right? So what happened in the pandemic last time in 2020? During March, they printed a ton of money. It was called quantitative easing, or differently said QE, where basically what Federal Reserve of US did is they sent the interest rates to zero and they started QE where they were buying treasury bonds, meaning that they were incentivizing the economy. That's why after that, crypto, stocks, and the majority of the markets went to the moon. So this is the basic information you need to know about how basically Fed works. I don't want to turn you into a financial guy or any kind of this stuff, but macro is such an important thing because, as I said, you can have the best technical analysis indicators why it goes up, but if you don't understand this thing, you'll never get why the market go up. Now, here's something demonstrated in the chart so you can understand it better. This is basically 2018 bear market. So the number one thing after you learned this scheme is that you might be like, yeah, markets now are easy because I know low rates bullish, high rates bearish. Why people get this wrong, you might ask. It's hard because markets are much more complex than some kind of news. What most people don't understand here is that, keep in mind these things. Market, crypto, but all markets in general, is a forward looking vehicle. Right? So what you need to understand here, whenever you have a confirmation from Fed or a major news, it doesn't necessarily mean that the market will take that trajectory of going up or down. So if Fed, for example, today it lowers the rates, it doesn't mean that the market will go like to the moon here. No, because markets are always forward looking and the information is priced in. Why I say is priced in, and you might be like, why that happens? It happens because it's all about the information that smart money and the normal people have. For example, the smart money, they got the best tool. They got the best information. They got also inside information. So for example, you might wait for Fed to increase interest rates. Let's say, let's do a scheme here. This is the chart, right? And you might wait, for example, for Fed to lower the rates at this time. Let me do another thing so you can understand it better. So the chart is going up, is doing great, then you see this thing, right? So here at this time, the Fed basically lowered interest rates here. And you're shocked like how it happens that Fed lowers the interest rate and we go down. It happens because of this thing that the market is pricing into the future. And as I said, the smart money, which I'm calling S, always has the information first. They are always focused into the future. They don't need the news that Fed will lower the rates. And sometimes those news are priced in. So the difference between how crowd reacts and how the smart money or institutional money reacts is that smart money and institutional money is always focused into the future, right? Not the past or the current. That's the difference between smart money and the average person. The average person waits for a news. The average person waits for Fed to do something so they can take an action. While the smart money is always positioned early. They bet into the future. That's why all those moves that you'll see right now in the market will shock you and you'll be like, how that happened? So here's something you need to understand. This was the top of the 2018 bull run. Then what happened? We enter in a bear market and Bitcoin dipped quite a while, right? So at this time, from all this time, Fed was increasing interest rates, meaning that as I showed you earlier, it's bearish for crypto because there's not much money into the system. So what happened after that? After that, the Fed decided to pause the interest rates. They stopped increasing. They just kept it at the same level, right? So if you go and check, this is the interest rates. So for example, let's go to 2018. At 2018, they were constantly increasing. You see here? Then this pause happened. It was 2.5 in in December 2018. Then from December 2018 till June 2019, they kept at 2.5. So the interest rate stayed the same. What happened? At this time, Bitcoin went up. You might be like, how that happened? It happened because, as I said, the smart money is priced in into the future. They focus on what Fed would do next and what can happen with the economy next, not what's happening right now. The difference between the smart money and the average investor is that probably the average investor would wait for a confirmation here. Here is basically when Fed lowered the interest rate this time and we went down. Isn't that crazy? Like if you waited for a confirmation, you probably missed all this rally. So high rates, a pause, then low rates. Now, this dip is a bit high, of course, because we had pandemic and we had the virus at this time. I totally get that, but it's a clear demonstration what happens when you just wait for news. You should never wait for news to come, then you pull the trigger. You should do the proper research, form your own thesis, and always have your analysis bet into the future. You never should take action based on what Fed does, because if you do that, as I said, you'll get to miss out. For example, if you waited at this time because it was the pause and you'd be like, yeah, I probably should have waited because I don't know what can happen next, you probably missed one of the best buying opportunities, because Bitcoin here was 3K at the time that Fed started to lower the rates. Look, it was 11K, almost 12K, right? So you missed all this rally because you were late. Now, what happened in the pandemic? In the pandemic, we had interest rates almost lowered to zero because, of course, it was a lockdown. It was brutal for people. Back then, people could never imagine to invest. I remember people told, like, I don't care about crypto, it's over. Then what happened? Federal Reserve dropped the interest rate to zero and they started money printing. That's what caused the biggest rally for the last cycle. Now, another lesson why you need to be why your minds need to be priced into the future. What happened during the pandemic at this time is that once this big crash came, no one, because I was here, no one at the time thought about investing in crypto, right? Like crypto was the last thing people cared back then because they were all about survival. People didn't had time to think about crypto. They were struggling to pay their bills. They didn't even knew what would happen with their jobs. It was all fear. Here it was all fear. Everyone thought Bitcoin is dead. It's gonna go to $100 and all this kind of stuff. So the average investor here, the mistake is that they were only thinking about what is happening right now, how bad this is, how I'm gonna survive, right? They could never imagine that, look, central banks, Federal Reserve, and all central banks worldwide will probably do some form of QE or drop the interest rates to zero, so they incentivize the economy. The average mind didn't think about the thing here. Why? Because, as I said, they were focused, as I said here, in the present and in the past, while smart money is always about what's next, what's the reaction, what can happen, what Fed would do. So that's why you need always to be focused into the future, not in the past and in the present. And you focus into the future because you might be like how do I know about the future? You can create a thesis about the future based on where we are right now. So you do the research, you see the trend, how it's going, you see what administration wants. For example, if the Trump administration is right now, what they want? Do they want lower rates, higher rates? Why? Do they need a strong economy, a bad economy? Why? Like, you need to form your own thesis. You don't need to wait for the news and then pull the trigger. And this is what happened this time. So all this red thing is high interest rates. This is a pause, and all this green thing is when rates went only low. And you know when rates went high? They went high in March 2022, right? Here is the time that Fed hiked the interest rates. Why? They hiked the interest rate because if you check this chart, inflation went through the roof. In March 2020, when Fed basically started the printing of money, we had technically had no inflation, 1.5%. Look at November 2021 when was the top of the bull run. It was 6.8. So inflation went through the roof because they printed trillions of dollars and they pumped everything. While if inflation goes up, you know that it's a bad sign, because it means that the dollar, the money that you have in your bank, is losing all the value. Like whatever you buy, you're technically losing the purchasing power out of it. And Federal Reserve actually noticed that. And what they did in March 2022, somewhere here, they hiked the interest rates for the first time. Even if you check this chart in March 2022, here you see March 2022, they hiked the interest rate. This was the first time. But this is why I tell you that the markets are always pricing into the future. If you waited for a confirmation from Fed to sell, yes, you could have saved some nice gains. But again, the top was 5 months before, and if you sold here, you lost probably 40% of the value. And for some altcoins, there were 70%, 80%. So whatever happens today, it's usually the price action justified into the future. That's what you need to understand. So whatever happens to Bitcoin today is usually the price that the news that would come 3 to 6 months from now. Now, this is not a perfect rule that you can say is 2, 3, 5 months or a few weeks, but usually the price that you see today is not what's happening today, it's what can happen in the future. That's why you need to understand this thing about the market, because it's such an important thing. And as I said, you get to this level by doing the proper research, by looking how interest rates are, by looking how inflation is. So for example, if today there's no inflation and inflation is not like big, for example, the Fed target is 2%. We all know that we are so near that. So Fed today, you can form your thesis in your mind that is very likely to lower rates because we have no inflation. But if you see inflation going through the moon like this for multiple months, that's a red flag, and Fed would probably come and save the economy and basically crush the inflation by just hiking interest rates. So this is such an important thing that I need you to really pay attention, because this is where a lot of people fail to understand. It's all about what carries the most weight into the market, and it's about everything is priced in into the future. So markets are always a forward-looking vehicle. If you wait for news and you react, you're gonna be late. If you react and you form your own thesis, of course, it doesn't feel good. It might feel uncertain, because you'll be like how I can form my own thesis when I don't know. It all comes from experience and the proper research and proper analysis. Like, I get that today you might still be confused, but you need to understand this simple principle in mind. If you wait for the news and then you pull the trigger, you'll act like everyone else. You can never win this game by doing the actions that everyone else is doing. You win by doing the opposite, and you win by thinking about the future, not the present or the past. You make money in this industry by betting for the future, how the economy would be 6 to 12 months from now. That's how you win. It's not what's happening today. Because you have also to realize something. The reason why Federal Reserve is always late is because of also the data. So just to add a bit more, again, I don't want to turn it too much into technical side of macro, but inflation data on Fed is CPI is mostly coming from 35 to 40%. It comes from shelter. But as you already know, usually the rents for a house, they don't go up within the year. They go up next year, right? So the data that Fed is having today is probably 6 to 12 months old. That's why, as I said, you have to form your own thesis and see how the economy is doing behind the scenes, and not just wait for news and confirmation, because you'll be left behind. The next important thing that you need to understand about investing is that the majority of people online learn that investing in crypto is fun, is easy. You hear all those stories that, look, this guy made so much money, but you don't hear how those guys did it. So I'm here right now to tell you what is the reality of investing in crypto. Whoever tells you it's fun, it's easy, it's amazing, I'm telling you for a fact that they never made really great returns. Because really great returns and real wealth and real money is not exciting. It's boring, it's frustrating, you doubt it, you feel like it's never gonna go and work out, and you feel like you're unsafe. You feel like, I don't know, maybe I didn't do the right move. This is a chart you need to pay attention that is proving what I'm telling you right now. This is a chart that basically shows how many times Bitcoin has been called dead. All those dots are basically how many times Bitcoin has been called dead. And it's funny, but if you invested $100 each time, you'd have like 71 million dollars today. Bitcoin has been declared dead 471 times, and I'm sure it's more than that, but that's the data that they have. So why I tell you this now? Can you imagine you for a second being a Bitcoin investor at this time, 2014? So I'll tell you what it was back then. I wasn't there, but I can understand because I've been early on multiple other coins. So imagine in 2014, Bitcoin was a coin that it was all promoted mostly on Silk Road, which was like a marketplace for selling drugs. It was basically just for games online that you got it for free, for puzzles. Like it made no sense, like why you needed to hold Bitcoin at the time. And during the time, you actually got all financial advisors, financial people actually telling you that Bitcoin is Ponzi, is dead, is a bubble, it's never gonna work out. Now imagine the feelings that you'd had at the time. Imagine you doing an investment, even $100 at this time, and imagine the feeling, like you'd feel like the dumbest person on earth, because you'd be like, why am I buying this thing when all the smart heads, and of course all the financial people at that time were smart people. You had all the people that had $1 billion at that time telling you that Bitcoin is dead. Even Warren Buffett told you that Bitcoin is not something that he is interested on. Don't get me wrong, he's the smartest investor of all time, but again, he missed Bitcoin. So it is what it is. So my point is this. Imagine what you would feel if you were early on Bitcoin. It's like you against the world. You feel like it is over, like why I should buy this. These are the things and the feelings that you need to study, you need to understand. What feels exciting, what feels actually good, it means you're late. Like look at today. We all know Bitcoin is the future. We all know someday Bitcoin is gonna hit $1 million. I don't know when, but it will come, and you know this thing better than me. It's not a matter of if, it's a matter of when. Back then it was a matter of everything. Back then literally people never imagined to touch even $1,000 when it was at 10, right? So same happened with Ethereum, the second biggest crypto. You know what happened when Ethereum came? Everyone called Ethereum a copycat of Bitcoin. It's never gonna go out. Bitcoin maxis, that people they made most money on Bitcoin, called Ethereum dead. It's never gonna go out and actually work out. And they just were wrong, right? And imagine if you were an investor back then. Imagine, for example, you are an investor and you discovered something new like Ethereum. You see all those competent people that you hear in crypto, which are called Bitcoin maxis, tell you this is dead. How you could have held that thing? It's like you going into a business that you have made zero money, and all the people that are successful entrepreneurs that made a lot of money before, they tell you like, this is not gonna work out. You'll feel like there's something wrong with it. You'll feel like I'm doing a mistake. You'll feel like, I don't know, maybe I changed my strategy. But these feelings, understand that they're super normal and super okay if you're on something new. You need to actually embrace this thing. You need to embrace the pain or the doubt or the questions in your head. If you don't have questions in your head, it means you're late. For example, today you know that Bitcoin is going to go and work out, but how you could tell someone in 2015 that let's say 10 years after that you'll have the biggest institution on earth like BlackRock to go and buy Bitcoin? They would never imagine. You would never imagine at this time. So questions in your head, doubt, feelings like it's not going to work out, understand that it's all normal. There's not an investment on earth that you'll have everything answered in your head. And if you do, you're late. Understand this thing, because it's such an important sentiment thing that it gonna actually make you go ahead into this market and you don't react and follow the crowd. Now, after you learned what is the thing you need to do to make the most money, investing versus trading, what moves the market, and what sentiment or mindset you need to have in order to get to the goals you want in crypto, we need to go in how to find the right coin. Now, this is a very complex thing, and I want you to listen to this carefully, because there are a ton of opinions online. There are a ton of things that people tell you. It's about use case, utility, tokenomics, this and that. Like, there are a lot of different things. But in this thing, I will show you one simple metric or element you need to pay attention, that you don't need to focus on all the minor stuff. If you get this right, you'll make the most money, and probably more than anyone else. And if you get this wrong, you'll actually go and analyze the things like the crowd. So as I said, when you go online, you'll find a ton of things that will be, for example, how to research a coin. They will tell you technical analysis, adoption, tokenomics, use case, utility, all this kind of stuff. Now, what is the number one thing that matters behind a coin? So for you to understand that, I'll go with a simple explanation with a company like Tesla in the real world. The reason why Tesla is where it is today is because of the company or Elon Musk. It's because of Elon Musk, right? Because he's the person doing the Tesla. Like, Tesla can't build itself. Tesla can't do something without Elon. So Elon is the mind behind the company. What about the Amazon? Who is on Amazon? It's Jeff Bezos. Without Jeff Bezos, you think Amazon would be here today? Of course no, because founder and the team behind a coin is everything. A platform or a business is everything. Same for crypto. You can have the best tokenomics, the best utility, the best use case, the best marketing. You can have the best fundamentals ever. But if the founder is someone that is incapable, someone that can't deliver, someone that actually is not driven enough to push through and build this thing, all what he wants is basically bullshit. Because all those things, use case, utility, tokenomics, marketing, they're all fake if the person behind that drives the project or the coin, it's something that it's incapable, right? So there are multiple scenarios that coins with actually bad use case, bad utility, bad tokenomics, bad marketing went up just because the founder was enough or had the capability to deliver. For example, I'll tell you a crazy example, which is Shiba Inu. Shiba Inu is just a bullshit meme coin, but it's one of the biggest, I think it's the biggest, most performing coin ever. Tokenomics were trash, no use case, no utility, just went up because it had the right team behind it. That's why even today, all the coins that we have in top 10, it's all about the founders. Like, Ethereum is not today because of Ethereum, it's about Vitalik, because without Vitalik's vision, Ethereum would never be here. Same for BNB. BNB wouldn't be here if it wasn't for CZ, the founder of Binance, right? So you have to be careful with all the things that you learn online, because online everything is all about black or white. If this happened, then it's this. Markets are more complex than that, and you need to realize that, as I said, when you have a founder that is strong, capable, and someone that you can trust, and is someone that can deliver, everything else becomes irrelevant. Because I don't care, and you don't need to care, what are the tokenomics if the founder is someone that it can deliver. So for example, if you go and learn the basics of research guides online, I'm quite sure that you'll find that, listen, tokenomics are very important. That's what people will say. Tokenomics are basically how the supply of coin is divided. So if, let's say, this is a coin, who controls the supply of the coin? Like 1% the team, 2% the whatever marketing. That's how it's structured, right, in general. Now, if something happens and you see probably a coin that a founder holds, let's say 70% of the supply, right, of a coin, your mind automatically be like, nah, it's a red flag, because that's what you learn online. If someone actually got a big token supply, it's a red flag because they can sell it, right? That's what you learn. But let me tell you that, as I said, what you learn is not always true for everything, because it wasn't for BNB. BNB, in the beginning and even today, at this stage, the majority of supply was held by the founder, more than 80%. Like, literally more than 80% of BNB supply was held by CZ, the founder. That's a fact, and you can research it. So the advice that you hear online that, yeah, if an entity holds a big chunk of coins, it's a red flag, costed you more than 600x gains, because BNB went from whatever it was here at $1, it went to above $600 last time. So the advice that you hear online for free that yeah, it's a red flag, it's actually costed you $600. And don't get me wrong, that's a good advice, but it's not always a good advice if you don't see the founder that is someone that you can trust. For example, I have no problem if the founder controls the majority of the supply and I know he's someone that has a vision to deliver. Did you know that even Amazon and Tesla in the early days had their supply concentrated to the founder? The majority of shares of Tesla in the early days were in control of Elon Musk, right? But you trust Elon, right? That's why you need to understand that founder is everything. Every kind of coin can have those problems about tokenomics and a ton of different things, but what matters is the founder. And the thing is like this, how you can know is someone that you can trust or capable, because you might be like, yeah, but how I can trust someone? There are multiple things that I did also a lot in my early days to analyze the founder. The people that the people that neglect it always miss the biggest information, because everything that is boring and feels like negative ROI is what people don't do. So what people don't do is, because right now everyone is lazy due to AI, they go and they don't go and watch the live streams or the videos of the founder. So what I do is I try to go on everything about the founder. So I go and research everything. I see every kind of stuff on the pages of Google, every article. If they have videos on YouTube, I like to go all about I like to go all at his live streams, interviews, videos, like everything that I can actually go and see more about him. I like live stream interviews and videos because they're more natural, right? Like you can learn a lot from a live stream and from an interview, because it might be like a lot of people have this perception that, yeah, why I should spend 2 hours watching this founder? I can go and ask ChatGPT and all this kind of stuff. That's what costs a lot of people gains, because in an interview, there might be, I don't know, something you catch on minute 8 of 9 video, or probably 1 hour after you watch that, it's a response or it's something from a founder that you like or don't like. You see their faces, you see how they respond. You can kind of understand how capable they are, or if they're trustworthy, just by the way they speak, just by the way they talk, just by the way how they behave. That's why it's so important to spend time in researching the founder, because all of this is irrelevant. All this kind of stuff is irrelevant if you have a strong founder, right? It doesn't matter what all of these are. You can have the worst tokenomics, the worst utility, and a strong founder, and a coin will go up. But you'll never have a incapable founder, amazing use case, amazing utility, amazing tokenomics, amazing marketing, and project will go up. Because all of this, it's all based on the person that is behind, right? All of this is just fake if the person behind doesn't know how to build and to deliver. That's why I'm saying it's all about this one here. And as I said, you gotta always focus on things that people refuse to do. Live stream, watch actually their past videos, read articles, go on Twitter or whatever social media they have, see whether they are active, go and check their Telegram communities or Discord communities, see how they react to criticism, see how they respond to questions, see if they ban people. But as I said, I love live streams and videos, and one of the coins that did 170x last cycle, I just discovered like this. I was constantly wanting to learn, I was researching a lot of founders. Then I came to the founder that created the coin that I invested last cycle, and I did over 170x. A lot of people might be like, yeah, you got it lucky. No, because I was technically listening, following those kinds of founders for 2 years prior. So never neglect to do the work that to you it might not look productive at the moment, because you'll be like, listen, the mentality of the average person is like this: why I should waste time watching this interview when I can put ChatGPT and they will do it for me, right? But as I said, it's about the things that you get within the live stream, within the video, and within the information you do by yourself. So this is the most important thing if you want to find the right coin. It's everything about the team and the founder behind. And you gotta do the work, and you gotta go and spend a lot of time to actually just know the person behind it, because it's all about that. Nothing else matters more than this. I'm not saying others are irrelevant, but this holds probably 98% of your research process. That's all. And keep this in mind, because as I said, there are a ton of examples of projects with amazing use case, amazing fundamentals, but a weak founder that never delivered. And there are thousands of reasons that founder was amazing, but use case was kind of not enough, marketing wasn't enough, tokenomics were not good, and then project skyrocketed. BNB is a clear example. Supply was held only by CZ. That's a red flag if you listen and learn from basically the majority of research guides that you see online. They'll tell you, don't do that, don't buy that coin. But markets are not black or white. And now one of the most important things is how to structure a portfolio, because the reality is that no matter how many good coins you have, if you actually fail at how to structure your allocation, you will probably make your things harder and never make the amount of money that you could have made. So the idea that many people have when they come to this buying and coins online is they think like, the average investor thinks like, I'll diversify more as it's easier to catch a coin that goes up. So the mindset of the average investor is like, let me try to buy a lot of coins because one of them will go up, right? That's what masses think. That's what a lot of people do. But you have to realize of something. This is such a huge mistake, because I know you have learned online that diversification is key. Don't keep all your eggs in one basket and all this kind of stuff, that the first things that you search on Google show up. But honestly, the reality of making money and the reality of creating wealth is that diversification may preserve wealth, but concentration builds wealth. So the majority of people in this industry join with the idea that I want to make a lot of money, I want to probably one day become wealthy from crypto. Probably that might be your goal too. But you'll never get that by having diversification. Diversification, if you've already made the money and now you want to protect it. You never make the most money by having a ton of coins. See, for example, all the people in Forbes list where I told you earlier. How many of them tells you, I bought this, I did this, I bought Tron, I was Solana, I was on BNB. All of them made their wealth on BNB, on Bitcoin, because they were early. It's just one coin and they were right and they held for a long term. That's it. It's nothing like they bought 20 coins and prayed for one of them to go up. The reason why I tell you why this is so important is because your mind thinks like the more I buy, the easier it is to catch something that goes up. But I'm going to explain right now in detail why this is bad and it's not the reality. It's like those things that people say like, yeah, it's easy to make, let's say, 2 times or 3 times a 10x, then do 1 time 30x. These are all theories that sound easy. They sound like you have a shortcut, but in reality, they never work. And I've been 9 years in this game, so I tell this from experience. So what huge diversification brings? Huge diversification brings a poor research process. Now, how it's easy to manage a portfolio when you have 3, 4, 5 coins, or a portfolio with 20 coins? Of course, a portfolio with 3 coins, because with 20 coins, you don't even remember what you have bought. Like the average investor's mindset when he puts money in crypto is they know just the basics. They know, for example, what Ethereum does, what Solana does, and that's it. But investing is not just about knowing the basics of Solana. If you want to make the most money, you gotta know everything in depth about Solana. And the majority of investors in crypto, they just know the basics. Oh, Solana is the future because I heard some friend, or I know it's this thing, or BlackRock adopted it. That's not investing. That's just investing based on collective intelligence that some guy thought that Solana would be big. You'll never make the most money by having this mentality. You'll always make the most money by actually focusing and knowing exactly everything about Solana. Like if you ask me for one of the coins that I hold, any question, I'm 100% sure I'll have all the answers, because that's how deep down I was focused, and I'm focused on researching that thing. It's not just let me buy something because someone made money. you need to know for all the coins that you have, like the back of your hands. You shouldn't know the basics, you should know everything in detail. It's like saying, when you have too many coins, it's like saying, I want to build 10 business simultaneously, or I want to build one or two. Which is more sustainable? Which is more likely you'll succeed? Of course with one or two. See, for example, all the people that are successful today. Did Elon Musk build 10 companies at the same time, or he did build Tesla and focus in one or two things? The best thing you can do is to focus on concentration and not diversification. And now, you might think like, yeah, but I know because sometimes I made money. Let's say you're right and you can get lucky and make money. What you don't get, and what many people don't get and they don't calculate, is that it doesn't matter how much money you make if you don't know when to sell. I know a ton of stories in the last cycle how a lot of people, they bought the right coins, they were early on Solana or even BNB, but they sold too early. Or they never sold, they rolled all the profits back to zero. So when you sell, it's probably one of the most important part of your execution plan in crypto, because as I said, it's not about how much you make, it's about how much you keep. No one cares about, oh, I was one day early on this coin. Everyone cares, or you care about what you have, what you did, what you kept, right? So creating an exit plan when you have 30 coins, 20 coins compared to 4 coins, it's much harder, right? Because you can't keep up with all the updates, all the information. And something that many people don't even calculate on this is because they think like, if I have a ton of coins, it's easier to catch something that goes up and that's it. But in the meantime, there are constant updates going with the coins that you have, right? So if you have 20 coins, you gotta spend 20 times more energy on consuming the content of those coins, because a coin might have an upgrade next month. Another coin might have a marketing campaign next month that you need to read to know what would happen. Maybe there's a supply unlock for another coin that you need to be aware that would cause a dump event. But if you have 30 coins, how you can keep up with all of that? It means like you're gonna spend at least 8-9 hours every single day keeping up with this kind of stuff. There's nothing like, yeah, I'm gonna read for 10 minutes and I'm gonna catch up. I'm telling this because I'm teaching you what it takes to make money via skill, not luck. So I'm not saying you can't get lucky. Of course you can get lucky, but luck is not going to send you far. As I said, I know a ton of stories that people got lucky on NFTs, on yield farming opportunities in the last bull run, and they lost everything in the bear market. I don't want you to be in those stories. I want you to be the one that knows what they're doing and has a true skill. And by doing all of this, still what you need to understand is that even if you're right, even if you do a good research process, even if you do a good exit plan, which is less than 1% chance, but I'm telling, let's consider you do it, what you need to calculate is how much money you make. Because here's the difference. This is the proper investor, this is the average investor that thinks diversification is key. So let's take 100k portfolio example. Let's say your mindset is, listen, I'm going to divide in 20 coins and buy 5,000 each, because it's easy to catch something that goes up and I can catch more, right? That's what people did, like, yeah, but if one coin does 10x, what if 3 does, right? But you don't play the game of investing with what if. You play the game by having conviction. You don't play a game by betting. Like, this kind of mentality that people have, it's like betting, like going to a casino and say, let me spread thin so I can earn more if something goes great. So 20 coins, 5,000 each. The average investors, let's say he catches a coin and does a 10x and you make 50k. You think like, I won. And technically it's a win, it's good money, don't get me wrong. But what you don't get is that the proper investor thinks like this. If you have 100k and you have 5 coins, not 20 coins, you are more convicted on those coins and you put 20k each. One coin does 10x, you make 200k. You see the difference between one right move when you have more money and one right move when you have less money. It's 50k, it's 200k. And imagine if you capture another coin here, it's 400k, right? So you gotta realize this thing, because the money that you make when you diversify a lot is insignificant because you have your capital divided in multiple parts. Like, if your capital is divided in a ton of parts, you will miss a lot of opportunities because you're divided in a ton of coins. And it's not about winning. Of course you can win here. It's about how much money that you make, right? So you win here in, like, this is a win. People will call it, yeah, but I won. Of course you won. But a true win would be for you to have more money, and it's just an opportunity cost at the end of the day. In this kind of allocation that you have a ton of coins, yes, you might win, but as I said, it's all about how much money you make when you ride. I know a ton of people be like, yeah, I captured 50x, and how much you made? Yeah, I made 20k. Why? Because you have so much less money on that and you weren't convicted, right? So the reason why people do this kind of stuff, from my experience, is because they don't have their not certainty, but they don't believe their analysis. The reason why people diversify is because they think like, let me spread thin because I'm not sure on what I've researched. That's the reality. So you need to work on your research process. There's not a shortcut to your goal, because as I said, you'll just make your journey hard. You'll think temporarily like you're winning and you're doing something great, but long term, it's not a sustainable thing. Another thing on how to structure a portfolio, which I'll recommend everyone to do, is to focus on having your allocation in each side of category of risk. So hear me out. For example, the major coins today in top 10 are coins that are safe, right? So what I see a lot of people making as a mistake is they have only, for example, major coins. They have like 10 major coins like Dogecoin, Tron, Solana, BNB, Ethereum. But all those coins, they're kind of in the same category of risk. Why I tell you that? Because let's take a look at Solana so I can explain it further. When Solana launched in 2020, it was in the first cycle. Why I tell first cycle? Because it hadn't had a bull run before. The first bull run that Solana had after it launched in 2020 was the 2021. This was Solana first cycle. These were the biggest gains where Solana went from $1 to over $200, which is over 250x, right? So this is the first cycle of Solana. Today, Solana is in the second cycle, so it's having its second bull run, right? In the second bull run, coins tend to have diminishing returns, right? Because Solana is not going to do the same that it did last cycle, right? It's not just about Solana. You can check how Bitcoin is not going to pump like it did in 2017, because the more people know about something, the more people join on something, it means that you're late, because if more people get familiar with a thing, it means that they know about a thing. Like the biggest money could have been made at this time. So what I notice with portfolio allocation is that a lot of people have coins only that are safe in second cycles. While I think the best approach would be to have some allocation in major caps like safe coins like Solana it is today, but also have some allocation in coins like Solana were last cycle. For example, in coins that maybe today they might look unknown, right? Maybe in coins in, I don't know, top 5 rank, like coins that probably you haven't heard before. This is where kind of the real opportunities is. Let's say this coin I haven't heard before, but let me check. This, for example, you see, Max is brand new. This hasn't had a bull run before because it launched in 2024. So this is a first cycle coin. This is where potential is. This is where you can make the most money. So by having a diversification on a bit of major caps and also small caps, at least you capture both the upside. So you capture safety that you have on major coins and upside that you have in this thing. But what people do is they either go all in on those low cap coins or they all go only in on safe coins. I would say have at least, it's not a perfect number, but have at least 2, 3, 4 coins in the major caps, or 2, 3, and then have some on the risky category. Again, how many coins to have? It's not a black or white or a certain rule, because everything comes down to your risk tolerance. Like that's the most important thing, right? Like this is not a perfect roadmap that you need to follow, but it's all about what kind of risk you want. For example, if you're a low risk taker, then for sure have the majority of your money in safe coins. If you're high risk taker, put let's say 70% or 60% in the high risk coins. So it all depends what is your risk tolerance and how much you can afford to actually see your portfolio down in this kind of time where things go down. So I hope you learn from this. And the last part, but one of the most important parts of this video, is how to sell at the right time, because it doesn't matter how much money you make when you basically lose everything in the bear market. So you start here and then you come up here. That's what most people do. It's fun and nice at this stage, and then they lose everything and they come back to the same point. So I tell you this scheme, so you need to avoid this and you need to be really careful. Now, there are three important elements you need to pay attention when to sell. Two are actually something that you gotta analyze the market, and three is something that not a lot of people pay attention, but it will basically correct every kind of mistake you make on the first two things. So the first thing is macro in the economy. As I explained earlier, how and what moves the market is Fed and macro policy. So everything that makes the market and the liquidity to go down is basically bearish for risk assets in general and also crypto. So for example, in 2021, what happened is that inflation went through the roof through all the money that was printed. So in 2020, what happened at this stage? Interest rates went to zero and we had QE, right? So we had low rates. Let me do it like this. We have low rates and QE at this stage. Now, low rates and QE, they bring inflation, because if you print money, you devalue the current purchasing power, right? So what happened is that all this time risk assets went up, but what happened is this thing. If you check this chart, inflation from March 2020, which almost was minimal, to near the top of the cycle, which came at 6.8%. So in the beginning of 2021, let's take only 2021, it was 1.4. It went to 6.8. All of this thing, it's a red flag. All of these things shows us that Fed would probably enter soon and hike interest rates because the economy is losing a lot due to the basically purchasing power, and people are being destroyed. And what happened? Fed entered the game 5 months later after the top was. So top was here, Fed entered here. That's why, as I've always said, markets are always forward looking. So you might ask, how did I know that they would come here when they came 5 months later? It's all about the analysis and seeing how the economy is doing, what is the sentiment, and how much you want. Because for example, inflation going from 1.2 to over, let's say, 6% in October 2021, it's a big red flag. It's showing you that something is breaking. It's showing you that the top is not far away, because Fed would enter the game, and that's what happened. So what makes the economy, what is the economy doing, is all basically what can fuel or stop the bull run. If, as I said, if there's a continuation of low rates, money printing, and let's say the current policy, the current administration in the government wants low rates, that's positive. So for example, what is happening right now with Trump administration? Trump administration has been clear that they want lower rates, right? So what is more likely to happen at this stage? Inflation going up or down? Of course it's gonna go up, but it hasn't shoot up yet, so we are still down. So we are still on same levels here. If inflation today was, let's say, 8%, 5%, 6%, I would say, yeah, we need to be cautious because markets can go down. But right now we have not those signs. We have the signs of market going up. Now, another important thing that you gotta realize is this sentiment. This is such an important thing, because you have to understand that at this stage here, just to tell you a bit of a story, at this stage here, I was the one to tell people last cycle to sell at the top. And you know what happened at this time? Everyone told me, you don't know what you're talking about. We're gonna go to the moon. 100K is confirmed for this cycle for Bitcoin. So when I told people to sell at this time, to them, it looked like a ridiculous call. And what happens is that during the basically last stage of the bull run, you have peak euphoria. So what happens at this stage here? Everyone never imagines to sell. Everyone is constantly thinking about how much money they're making, how they're gonna spend it. You lose the concept of what it means, a lot of money. And when everyone is calculating and sharing their profits online, like, look, I made this amount of money, I made 7 figures in 24 hours, these are all red flags, because the markets never work in the same way for a long period of time. They work for some time, but not for a long period of time. So the sentiment can teach you a lot. If everyone is thinking that we're gonna go to 200k, 300k, and the market has been going up for quite a period of time, and you know that macro policy is probably entering into a phase that they're gonna increase interest rates and it's not good for the market. That's a bad sign. For example, at this time, what we had peak euphoria and inflation was through the roof at this stage. So that's a red flag, because you got everyone telling you that we're gonna go to the moon, which the crowd, you know, is most of the time wrong, 90% of the time, and we have inflation. So these are the red flags that you had at that time, but people couldn't realize those things because they were all busy making money. Like, you have to realize up something. A lot of people join late in the cycle, and the reason why they want things to continue to go up more and more is because they miss the biggest move. So for example, a lot of people joined in the last cycle at this stage at 59k. Then they experienced this kind of dip, right? So people that joined here, of course, if you told them to sell at this stage, they would never like it. If they joined here and you're telling that we're gonna go down, of course they didn't like it because they made no money. So it's all about a mix of opinions of people that always come and join in different stages. The ones that join early are much more comfortable to get out and are much more open to those opinions. Like for example, if you bought here, yes, maybe you have more chances to actually see through the real information and not get manipulated to the bullshit, because the human mind is simple. Like if you buy late, you're trying to manipulate your mind that we're gonna go higher and we're gonna go higher. If you're comfortable with what you made, if you were early, then you don't care much to just think about like only Moonboy targets. And now, even if now a lot of people don't get those two things to right, and I totally get that, because everything comes down with experience. But one simple rule that I tell everyone is to focus on how much you win. This is such an important element, because this will prevent you from any kind of mistake you do on the first two stages, and this is three, sorry. So here's what you need to understand. You need to actually write down how much you have invested in crypto. Now, then you have to realize how much you made in crypto. So here's an example. Let's say you have put it $10,000 in crypto. Let me do it here so you can create a better idea. Let's say your investment is $10,000, and now you have made a 20x, which is like, let's say $200,000, right? So you have put 10,000, you made a 20x. Now this is all in crypto, but personal life, let's say personal savings to you are like, I don't know, maybe 150k. So what you got saved in a bank, and let's say you have no property, right? It's only 150k, right? So you put 10,000, you make 200k. Personal savings are 150k. Now, what you gotta realize is that most people, what they did last cycle is they try to hold more. They'd be like, yeah, I made 200k, but I know a guy that made $1 million. These are the mindsets that are costing you to actually never sell at the right time. Why? Because for you at this stage, a 200k is life-changing, right? Because you never had that money before. Even if it was, let's say that you had 300k, you still made almost 90% of what it costed you probably years to save. Like how many years it cost you, let's say, to save 300k? Maybe 10 years of work? Just showing you some random numbers, right? So in crypto, you did it in 1 or 2 years by having 90% of it. Definitely get out. Like you have to realize that if the money that you've won makes an impact in your life, you need to get out no matter what people think. Like even if, let's say, you made 200k at this stage here, right? Let's say you made 200k at this stage here. You'd be like, yeah, but I could have made much more because look how much gains are missed. That's totally right to think, and I agree. But at the end of the day, even if you got out here, still you'd have money which impacted your life for great, and the regret that you'd have would be minimal compared to, let's say, shooting for the moon and probably never getting out here and then losing back, right? So it's all about getting out when what you want make an impact in your life, not trying to do the best moves. Because I'll tell you what's the reality of crypto. No matter how much you make in crypto, you'll never be happy with what you achieve. And I'll tell this from experience. Like, if you make today, let's say your goal is to make, I don't know, $1 million, you'll see the guy with 5 million, you're gonna feel like a small fish. Because I've been on those stages. You feel like you're doing nothing, and there are people with more than you have. So you constantly start to feed in your mindset that you need more and more. And guess what? You completely ignore the two parts here, macro sentiment, just because you get into this scheme of, yeah, this guy made this so much money, so I need to do it more. And then you completely lose what's going on with the market, and then you probably ride, like a lot of people, all the profits back. I know a ton of people that started here and rode everything to almost where they were. So always keep in mind something. The most important thing you gotta realize is sit down with yourself, look how much you have invested and look how much you have. If what you have makes an impact in your life, it doesn't matter, it should change your life, right? It makes an impact for good. Like if with that money you can buy another property which can impact your life, or can buy something you want, or can buy you freedom, definitely get out, because that's the most important part. And even if you're wrong, and even if you get out early, as I said, it's better to have that feeling that be like, yeah, I still made what I wanted, what could impact my life, but I could have made much more. That's a better thing than saying, look, I shoot for the moon and then I made nothing. Because I know a ton of stories about people saying I shoot for the moon and I made nothing. So if you actually have this third mindset here, you will actually save a lot of money by getting out at the right time. And I'll tell you a simple advice, like at the end of this free course, so you get basically the best out of it. When I started out, I completely did everything by myself, and honestly it costed me money plus time. So the best advice that I would give it to you is to try to invest more in your knowledge and more, I would say, in your surroundings, because the information in crypto is a lot. You'll have a ton of manipulation, a ton of rugs, a ton of scams, a ton of information that you don't know how it would be. But if you create your own crypto circle, and if you had your own opinions of and like people that you consult, you'll be ahead a lot into the market. And it costed me 8 years, right? I know a lot of people love to do it by themselves, but it's not a smart move, especially at stages in the bull run that you don't have much time. Because for example, you might join today and you might be at this stage of the bull run where gains are going. You don't have time here to go through the trial and error, because maybe when you're ready to go and you're ready to invest, you're investing at the top. And no matter how much you're ready and you have the right knowledge to buy in crypto, you're just gonna lose money, because at the top, buy whatever you want, still you're gonna lose money. And about many people that think, yeah, but I can do it next cycle, trust me, how things are going, you don't even know what can happen next year. Like, uncertainty in the world at this phase is at the highest level ever. I'm not saying crypto will not be here to stay, I'm not saying it's not going to be another bull run, of course it will be, but things might change. What you learn today might not work 6 months from now, right? That's why I wanted to do this free course, so you can learn what's currently working and what I've learned from the best, and share you the best lessons from 8 years experience. I hope you learned, I hope you enjoyed, and I highly recommend to actually subscribe for more.